Hey traders, it's John Fortune here with this week's weekly Forex Forecast. I hope you're all having a fantastic weekend. We're going to have a quick review of the key events heading into next week, and something we need to pay attention to is we do have FOMC coming up, not this coming week, but the following week, and this is having an effect on the markets and will likely have an effect on the markets until this event takes place. We're then going to look at the scorecards going into next week before moving on to the individual currencies, as we always do, to assess the technicals of the currencies themselves. And then we're going to look at the best currency pairs heading into next week before finishing with stocks, gold, silver, and Bitcoin. So if we start just quickly by looking at the economic calendar for the coming week, we can see there's not too much we need to pay attention to next week in terms of economic data. We have a US bank holiday on the Monday, and in a normal trading week, the market tends to position itself, or the market's position, on the Monday, and then they move Tuesday, Wednesday, Thursday into Friday. You get some profit taking on the Friday. And when you have a bank holiday on the Monday, for example, out of the US, the markets tend to do nothing. And then on the Tuesday, they start to position, and then Wednesday, Thursday, you can start to get the move. So nothing really major we need to pay attention to, but just something to consider going into next week. I wouldn't get into too many positions on the Monday because the markets aren't likely to go anywhere. On the Tuesday, we have an interest rate decision out of Japan. Not something we need to worry about too much though as it stands, because as we've discussed many times before in the videos, the BOJ policy is very rigid and not much ever comes out of these as it currently stands. We do have some inflation data out of the UK and Canada on Wednesday, so perhaps we see the markets getting a bit volatile around there, but nothing we need to pay attention to in terms of planning around or expecting major trend changes due to those pieces of inflation data. And then on the Thursday, we have some employment data out of Australia. So again, very much like the CPI data, we might see some volatility, but it's not something we need to plan around. So apart from the bank holiday on Monday, where the markets are unlikely to move, there's not too much to pay attention to heading into next week. The big thing is the following week. And you can see in the following week, as already highlighted, we do have an interest rate decision out of Canada and also the US. And it's the US interest rate decision which is likely to cause the markets to be neutral heading into that week, and we may also find the markets don't move too much this week because of that. So with the interest rate decision out of the US coming out on Wednesday of not this coming week but next week, it is likely to make the next week or two fairly tricky to navigate, and I would certainly be looking to trade less or take less risk over the next week or two. And then once the FOMC interest rate decision comes out, start to look to allocate more capital, as FOMC on the 26th is likely to start to provide the next directional move in the dollar. And of course, when the dollar starts to move in one direction or another, you get all the currencies across the board and other assets as well, such as even equities and commodities moving as well. So to summarize, if the next week or two heading into FOMC are going to be kind of sideways or lacking direction, I still want to be trading, but I'm going to be very specific with my trades. I'm going to only try and take the best trades heading into FOMC, and then I'll look to start to increase risk or increase capital if we get directional moves from FOMC for the following month or couple of months. Okay, so looking at the scorecards heading into this week, you can see something quite important here. There's some information which is being given to us, and that is that if we look at the dollar has changed from bullish to neutral to neutral. The euro has gained from a -2 to a -1. The pound has come off of the high of 3 down to 2. The Swiss franc has lost 2 of its rating from last week back to neutral. We have the Japanese yen, which has gained 2, conversely to the Swiss franc, back to neutral. The Canadian dollar hasn't changed. It remains at +2. The Aussie hasn't changed at -1, but the New Zealand has come off the lows from -3 to -2. So what we're seeing here is, first and foremost, look at these 3 risk-off currencies, 1, 2, 3, right in the middle, completely neutral, a score of 0. And with both the pound coming off the high of 3 down to 2 and New Zealand from -3 to -2, what you're seeing here is you're seeing the markets overall becoming more neutral. You're seeing the markets becoming more corrective. You're seeing opportunities drying up. And if you look at the markets from last week, they didn't really go anywhere. It was kind of a sideways week. Out of the 7 markets, which are highlighted as the best last week, we had 6 currency pairs and also gold to the upside. 5 out of those 7 closed in the direction. So 5 out of 7, if you had just bought on the open or sold on the open in the direction, you had over 70% chance of making money out of those 7 pairs last week. But if you look at the distance they moved, there were no big moves to the upside and there were no big moves to the downside. So we didn't really see any of those explosive moves as you would be looking for with the strongest versus weakest currencies. And again, if you put all of this together, it shows opportunities drying up in the markets as of last week. And why is that? Well, we know we have FOMC on the 26th, and it looks like the markets are already starting to correct and turn neutral heading into FOMC on the 26th. So the reason this is very important is because if we go out in markets which are becoming neutral and we allocate lots of capital and the markets just chop around, we can end up taking more losses. So when the markets here turn neutral, yes, I will still be looking for opportunities, and we'll look in a minute at the best pairs heading into next week. But this is what I was talking about when I said I want to be very specific with my trades and only take the best trades heading into the next week or so. Even if I just took 1 or 2 trades per week over the next 2 weeks heading into FOMC, I would have no problem with that personally. So aside from the very important fact that the markets are already starting to turn neutral heading into FOMC on the 26th, the standout currency to the upside here going into next week is the Canadian dollar. It's held its rating of +2. And when we go and look at the markets and the charts themselves, you'll see crude oil is rallying to new highs. It's a market that I like going into next week. And the Canadian dollar is really benefiting from this rally in crude oil. We took out the targets to the upside in crude oil last week. My second favorite long is the pound. And the reason this is my second favorite, although we have a score of +2, we are coming down from a score of 3. So we're seeing some downwards momentum in the strength of the pound. It's gone from being very strong to just strong. So because of that, I prefer Canadian dollar long positions next week. And when you look at the rest of the currency pairs and you see 0, 0, 0, there's nothing really else to the long side. So what this tells me is the best chance of making money heading into next week is likely going to be to focus on those Canadian dollar long positions. Yes, we'll look at some pound longs, but the CAD long positions are more than likely going to be the easiest or the best place to try and make money next week. So I'm absolutely going to be focused on CAD strength next week as a priority. And to the downside, the slight problem we have here is the yen, the franc, and the US dollar are all neutral. So there is no real clear direction in these. And the New Zealand dollar, although it's the weakest, it is coming from a low of -3. So we're seeing some bullish momentum coming into the New Zealand, even though it's the weakest. So conversely to what we looked at in the pound. We really don't want to see that. What we want to see is if the market is going from a -1 to a -2, that shows some momentum to the downside. But if we go from -3 to -2, it increases the risk associated with those currencies somewhat. And again, this is just because of the markets becoming more neutral heading into FOMC. So to the downside, I do still like the New Zealand dollar simply because it's the weakest currency, although it does have that strengthening from -3 to -2. And I do like the Australian dollar, maybe even slightly more, or at least the same as the New Zealand, because although it scored less, it hasn't moved from last week. There is no strengthening of the Australian dollar. It remains weak still. So I like the Aussie, I like the New Zealand the best to the short side next week. And the euro, we will look at some euro short setups heading into next week, vis-a-vis the CAD and also the pound. But you can see it also has a bit of bullish momentum going from -2 to -1. So because of that, I favour both the Australian dollar and the New Zealand dollar to the short side next week. So we will be going and looking at the markets. I would like to look primarily at Aussie CAD to the downside, New Zealand CAD to the downside. I would also be interested in pound Aussie to the upside, pound New Zealand to the upside. We will also look at Euro pound, Euro CAD, and the interesting setup as well going into this week is also the US dollar. Does look like, although it's neutral, we could see further weakening. And if you look at this score of 0, it actually comes from a score of 1. So we're seeing some momentum to the downside in the US dollar, which increases the risk of that continuing into next week. So we will also be looking at some dollar short setups, pound dollar to the upside and US dollar CAD to the downside, which I like next week when we go through the charts. So let's have a look at the individual currencies heading into next week. And you can see the US dollar is structured to the downside, having broken out of this range over here. And what's interesting about the US dollar is I discussed in the scoring system that it is neutral, has a score of 0. But when you come and look at the individual currency itself, or you look at the index here, this is clearly telling you if you are going to choose one direction or the other for the dollar, it shouldn't be to the upside. So if you're going to go and trade a neutral currency, or the dollar in this case, we would really want to look for that US dollar CAD to the downside, perhaps pound dollar to the upside, as opposed to, let's say, US dollar or New Zealand dollar, so New Zealand dollar versus US dollar to the downside, which would be dollar bullish. So the individual assessment here is showing us that if you want to trade dollars next week, the best direction would be to the downside, not to the upside. And what we could be seeing here is we could be seeing one more down next week into the target of the 94.62. The market gets corrective, and then if we get a hawkish Fed the following week, we find a low down in this area and then rally, because I do think the dollar actually comes up and takes out this high at some point. So my base case here is for one more down in the DXY next week. We then move sideways and start to bottom, perhaps with a double bottom, and then we get a hawkish Fed and we see a rally from FOMC on the 26th. So I don't usually like to go too far ahead because I like to trade what's in front of me. However, that's what I think we could be seeing in the dollar over the next 2 weeks. Next is the euro. The euro, opposite to the DXY, we have broken out of this, what actually looks like an ascending triangle pattern here. And we've broken out with momentum. And it looks like we're now forming a bull flag. So again, conversely to what we just said in the DXY, I wouldn't be surprised to see this making one more up, forming a double top here, and then in FOMC week we start to see this continue down, because just like I expect new highs in the dollar, I think there's a very good chance we come down and we make new lows, and this is just a big kind of bear flag as it stands. And you can see this rally, this breakout to the upside, is what has caused that strengthening of the euro from -1 to -2. So the individual currency assessment, yes, the euro is -1 heading into next week, but I'm not a huge fan of euro shorts because I do think we could see one more up before a sell-off heading into FOMC. Next is the pound. The pound is structured to the upside. It was rated as the best long last week, and we did take out both targets to the upside. There is some momentum in the pound here, and especially if we're going to get one more down in the dollar heading into FOMC, I think we also see another rally in the pound. Could very well come up to the target at the 1.3829. So I am still bullish on the pound, even though it has lost a little bit of its strength compared to last week. Next is the Swiss franc. The Swiss franc actually got kind of choppy last week. We came down, we bounced, and then we came up and took out the target almost to the pip. In fact, I think this was pretty much to the pip here. So heading into this week, I am on balance looking for further advances in the Swiss franc. But because we have two things, we have a neutral rating in the Swiss franc first and foremost of 0, and we're sitting right at the previous high over here, we may just kind of move sideways. So again, I think there are better currencies to trade next week than the Swiss franc. And if you look at the scoring system, we actually have some weakness in the Swiss franc from 2 to 0, and at the same time it's structured to the upside. So the Swiss franc to me is fairly neutral, and I'm not sure I want to get tied up in the Swiss franc heading into next week too much. Next is the Japanese yen. Now the Japanese yen has a neutral rating. However, you can see overall this is still structured to the downside. And because of this, on balance, I would prefer to look for yen short positions if I were going to trade this as a neutral currency. I'd be looking for a breakdown and for this to head down to new lows. So again, I think there are better markets to trade than the yen pairs. However, because this is still technically structured to the short side, you can see CAD yen and also pound yen are two currencies which I will be keeping an eye on next week. Next is the CAD. Now the Canadian dollar took out both targets to the upside last week, and it pulled back from the second target. It is now forming what looks to be a bull flag, and I would be looking for any pullback in this area as an opportunity to look for further advances in the next rally into the 0.8040. And if this rally takes place next week, this is the move I think has the best chance of paying us in what could be a tricky week to navigate with FOMC looming on the 26th. So this move to the upside in the Canadian dollar is something I'm going to be keeping a very close eye on next week. Next is the Aussie. The Aussie took out both targets to the upside last week, and having done that, it sold off and it kind of fell back into this correction. And you can see the reason this is struggling to find any real momentum to the upside is because overall this is a corrective move. This is a counter trend move. So yes, the trend near term is to the upside. However, when you have counter trend moves, they tend to be choppy. So they do this. And then when you have moves in the direction of the trend, they're explosive. And that's why we always want to be looking for moves in the direction of the trend, because by their very nature, by their construct, they are better opportunities and more explosive opportunities, especially if you can find these, what you might refer to as impulse waves in the direction of the trend, but also between the strongest and the weakest currency, because not only are they explosive, they're the most explosive because you have a strong and a weak currency. And that's what we're always trying to identify here. So the Aussie is still technically slightly bullish, but it's in a correction. And when we look at the rating, it's -1. So again, this is showing you the markets are kind of neutral. There's no real easy pickings here where we would come into the markets and say, yes, the Canadian dollar, for example, is a +3 and the Aussie is a -3. So Aussie CAD to the downside is a great short. So it just underscores the need to find the real best opportunities over the next week or so and not to take too much risk, in my opinion. Next is New Zealand dollar. We took out the target in the New Zealand dollar and we sold off, very similar to what we saw in the Aussie. And again, this is just for the same reasons, is that this is overall a corrective move. So any rallies to the upside lack momentum because it's counter trend. And at some point, we should be expecting this to break down to new lows. But again, you can see corrective, currently structured to the upside, technically speaking, but a rating of -2. Okay, so let's have a look at the charts then heading into next week and see if we can identify the best opportunities in the markets themselves. We're going to start with Eurodollar because we always do Eurodollar every single week because so many of you request it and so many of you want analysis on it. However, I don't think it's one of the best opportunities this week. And this really mirrors what was discussed in the dollar, in the euro, which is that we do have a rally with momentum and it does look like we're set for further advances, but overall this looks to be a correction. And I wouldn't be surprised to see, as I said, Eurodollar pulling back, rallying into the 1.1513 to a new high, and then that being the end of this correction, essentially heading into FOMC where we get this double top and we start to come down for this low over here. That's what I'm looking at in Eurodollar, but again, I don't think it's the best opportunity next week, but that's what I'd be looking for. Next is crude oil. Now, crude oil is very important because you can see we took out the target to the upside last week, and it does look like we're coming up to the 85.75 in crude oil. I have this highlighted in gold because as a commodity trade, this actually looks like one of the better opportunities, especially if we're going to see one more down in the DXY next week. If that's going to happen, it does look like we're going to rally to new highs, taking out the 85.75. So I like crude oil to the long side next week, and this also underscores the position of having the Canadian dollar as the favorite pair going into next week as well, because any rally in crude oil should help support Canadian dollar to the upside too. So the first currency pair here is New Zealand CAD. Of course, this is the weakest currency, the New Zealand, versus the strongest currency, which is the Canadian dollar. We've already started to pull back, so any continued correction in this market would be viewed as an opportunity to just view this as a correction of this move, this bear leg. Maybe we even pull back. Probably don't pull back to here. That would be a pretty steep move. But any pullback in this area is viewed as an opportunity to look for bearish reversals down to the next key of support, 0.8460. Australian dollar is next on the list here, and you can see we've already pulled back and we've started to sell off in Aussie CAD. So any continued pullback in this market next week, I would be looking at this as a potential opportunity to go short down to the next key of support and the target at 0.8970. Next is Euro CAD. Now this is not highlighted in gold because, as I said, if we get one more down in the dollar next week and we get one more rally to the upside in euro, this might be a little bit choppy. So I favor New Zealand CAD and I favor Aussie CAD. However, based on the scoring system, any pullback in this market would still be viewed as an opportunity to look for shorts into the 1.4170. Next is US dollar CAD. Now I've highlighted this as gold because although the dollar actually scores as being 0, which is stronger than the euro at -1, we did discuss that potential FOMC setup whereby we get one more down in the dollar. And if we are going to get that, certainly US dollar CAD to the downside would be a good one for next week. What I also really like here is we have very strong momentum in US dollar CAD breaking below this kind of correction here. And this is really indicative of further declines. So any pullback in US dollar CAD next week will be viewed as an opportunity to go short into the 1.2432. And this is where we could actually start to see our double bottom taking place before FOMC, when we get hawkish Fed and we start to see a rally from this area. So actually, although New Zealand and Aussie CAD score better than US dollar CAD because of the way this is technically structured in FOMC, I think US dollar CAD may even be my favorite opportunity or currency pair heading into next week. Next is CAD yen. Now CAD yen is kind of corrective, however I am still bullish on this, and the reason this is highlighted in gold is because the Japanese yen is still structured overall to the downside in the bigger picture. So what I'd like to see here is any continued correction, I'd be looking for potential reversals to the upside in this market. I'm going to be looking up towards the 92.96. Next is CAD franc. Now, although I am bullish on CAD franc, and actually we have really nice momentum and a bull flag setting up, the reason this is not listed over here is because the franc doesn't score as well as the New Zealand and the Aussie to the downside, and we also don't have the fact that the franc is overall in a bear market like the yen, and the US dollar heading into FOMC with that fairly unique potential setup. So I am bullish on CAD franc, but I prefer the highlighted CAD pairs here in gold. Any continued pullback is viewed as an opportunity to look for bullish reversals into the 0.7364. Next is pound New Zealand. Now pound New Zealand was a market highlighted as last week to look for potential bullish setups, and you can see here we did pull back, and when we pulled back, this was an opportunity. This was essentially, you could see this as a mispricing because we already established the pound was strong and the New Zealand was weak. And so when we had the sell-off, that was the opportunity. And you're never going to pick the bottom, of course, but anywhere in this area, you could have looked to go long. And we are now heading for the highs. And if the pound remains strong as it currently is, we should be heading onto the 2.02620. So any pullback in this market is once again simply viewed as another opportunity to go long into the key area of resistance highlighted here. Next is pound Aussie. Pound Aussie was also a market highlighted to the upside last week, and again we had this sell-off, and as we sold off, this was the opportunity again for a mispricing because we knew this sell-off was against what we were seeing in the currencies. The pound was strong, the Aussie was weak, and of course rebounded and snapped back now at the highs. So any pullback for anybody not involved from last week, any pullback would be another opportunity to look for bullish setups into the next key of resistance, the upside at 1.9145. Next is Euro Pound. Euro Pound was a market highlighted to the downside last week, and we did kind of drifted sideways in this market. We did pull back somewhat and started to sell off. So for anybody not involved from last week, any pullback once again would be viewed as an opportunity to look for further declines into the 0.82870. But this is not a preferred pair next week. Why? Because if we do get one more rally in the euro, this is probably just going to continue sideways. So I prefer pound New Zealand and I prefer pound Aussie, and I also prefer pound yen and pound dollar, as we're going to see over and above euro pound next week. Next is pound yen. This is highlighted in gold purely because we have the second strongest currency versus the Japanese yen, which is still in a downtrend. So at any point we could see that reversing lower, and if that's the case, any continued pullback, I would be looking for a reversal in this market, and that would set up opportunities into the 158.20. So I don't like the pound pairs highlighted here as much as I like the Canadian pairs, especially US dollar CAD to the downside, and then New Zealand CAD, Aussie CAD. But out of the pound pairs next week, pound yen is one of my favorites. Next is pound franc. I am bullish on this market. However, as we saw, the franc is really neutral, and again, compared to the other markets, I don't like this as much. But any pullback in this market is still viewed as an opportunity to look for longs into the 1.2588, but not highlighted as one of my favorite opportunities this week. And finally, we have pound dollar highlighted in gold. Why? Because of that specific one more down in the US dollar, which it looks like we could get next week. That bear flag in the DXY, which is setting up. And if we get one more down in the DXY, we are likely as well to see one more up in the pound versus the dollar, first to the highs and then on to the 1.3827. So pound dollar highlighted as one of the better opportunities next week. US dollar CAD I think is my favorite, probably then followed by pound dollar. Then I like the New Zealand and Aussie CAD setups, and then finally CAD yen and pound yen if I had to order these from best to worst. Okay, so wrapping up the video here with stocks, gold, silver and Bitcoin, starting with the SPX. Now, what we've seen in the SPX over the last month or so is we saw towards the end of November last year, we saw tech stocks rallying, and tech stocks started to come down around the 22nd of November last year, the beginning of December. And as the tech sector has corrected, this has weighed on the S&P 500 because the tech sector is the largest weighting in the S&P 500. And what we're starting to see is the tech stocks look like they could be coming towards a bottom, and we could be starting to rally again in the tech stocks over the next few weeks. If that's the case, you will see this having a positive effect on the SPX. And although not much happened last week, as it currently stands, this should still only be viewed as a correction. So I am looking further advances in the SPX, and I'm going to be looking up towards the target highlighted last week at 4815.04. In other words, looking to make new all-time highs here in the SPX. So I am bullish on the SPX. However, because it's kind of correcting, moving sideways, and because tech stocks haven't yet bottomed, I would still have some hedges in place. I'd prefer to be long in the form of a long-short portfolio as opposed to outright bullish on the SPX. Next is the Nasdaq. Now the Nasdaq actually broke lower, and this is just as I said because we have seen a decline in tech stocks from the end of November last year or the beginning of December through to today. But I would not be surprised to see the Nasdaq coming and breaking back above the 160.10.20. So we're currently structured to the downside. I am somewhat bearish on tech, but as I said, we could be coming in the bottom. So I personally wouldn't want to go out and just short this. I would be patient on tech stocks, look for Nasdaq to break the 16010.20, and that would in fact be the indication to start to look long on not just the Nasdaq, but tech stocks in general as well. So yes, technically bearish here on the Nasdaq, but this is telling me to be patient and wait for a reversal high to get long, because I do not think, as it currently stands, the indices are setting up to crash. So any break higher in the Nasdaq would set up a reversal, and I'd be looking for new highs once this was broken, and that would be the sign as well that we could start to see the tech sector picking up, and with that would come the SPX. Next is the Dow Jones. Not too much happened in the Dow Jones last week. We kind of just moved sideways, so I am still bullish on Dow Jones, and any correction is viewed as an opportunity to look further advances to new all-time highs at the 36,986.88. Again, I wouldn't want to be naked long on this, but I would want to be net long in a long-short portfolio. Next is the Russell and small caps. The small cap sector is forming an inverse head and shoulders, which of course is a bullish pattern, but it's developing. It has not yet broken or confirmed this. And the Russell is really in a position where whichever way it breaks here, it's likely to break with strong momentum. If it comes back up and breaks and confirms this inverse head and shoulders, we're likely to see a strong rally to the upside. If it comes down and breaks the head here or the low of the 21070, well, there's likely to be a number of stop losses here, and we could break in this direction with momentum. So as it currently stands, I would personally be neutral on the Russell, and I'd wait to see which way this breaks in order to get a better understanding of the next moves in small caps. And since the Russell leads the other indices, and since small caps lead the business cycle, if we do come down and break the 21070 and we do this with momentum, that actually would be a warning sign, and we would have to take note and reassess what's going on here in stocks, because that could well be an indication that other indices are likely to follow. So very important, keep an eye on the Russell, seeing the next directional move, and as it stands, I would rather be patient on small caps. And the last stock market here we're going to look at, as always, is the Nifty. Now the Nifty has taken both targets to the upside last week, and the interesting thing with the Nifty is, what did we see last Wednesday? We saw Indian CPI data coming out higher than previous, but less than expected. And this could be a sign that we're starting to see inflation peaking in India. Well, what does this mean for equities? Well, if we're going to start to see inflation peaking and it's going to start to come down, this reduces the urgency of the Indian central bank to step in with hawkish measures and policies, which would be a headwind for Indian equities. In other words, it would apply downward pressure to the equity market. And so if you remove the urgency for hawkish policies, this does become somewhat of a tailwind. This is supportive of equities. So I do think there's a very good chance we see Indian equities heading to new highs at the 18,594.90. So I am bullish. Any pullback in this market would be viewed as an opportunity to look for further advances into the 18,594.90. And I think on balance, Indian equities are probably looking slightly better than US equities as it currently stands. And finally, we have gold, silver, and Bitcoin. Now, last week, gold was the market out of all the markets which I was focused on the most. And I spent 6 whole minutes of the weekly Forex forecast last week covering gold. So we're not going to go into it in detail this week, because if you want to see a more detailed overview of gold, you can look at last week's assessment. But in last week's video, I did highlight the fact we were right at a point where we could explode in either direction. And we have this major double bottom, which was retested, and it was retested with a head and shoulders. So we had this kind of one up pattern and one down pattern. And this still remains the case, because last week we actually had an inside week in gold. And in last week's video, I highlighted there was a double bottom down here, and I was looking for gold, as I said last week, to rally pretty much from where we were. We had this double bottom, we rallied. We have not taken out the high over here. And of course, this high and this low are the 2 key breakout points to take note of in gold. So going into this week, I am still bullish, and in fact, I'm long from the double bottom highlighted down here, and I've moved my stop losses very close now, so I have very little risk on this. But what I'm looking for is the break higher above this high this week. There is a near-term target of the 1842.97. However, as I stated last week, if we do break this high up here, what I'm really looking for is for gold to break with momentum. And I'm unlikely going to be taking profits at 1842.97. What I want to see is this start a new trend to the upside, and potentially even heading up to the 2000 level and maybe higher. Because again, as we discussed last week, the overall trend is to the upside, and we may be coming towards a much larger correction in an uptrend. So the gold analysis more or less remains unchanged from last week. I'm looking for the break higher, and as I said last week, because of the unique way this is structured, if this fails and we do not break this high, but instead we come all the way down from where we are, failing to make a new high and failing to break this, and we break here, there will be lots of stop losses, including where my original was, and they will be taken out, and that could actually cause a cascade to the downside. So again, if you want a bit of a deep dive on gold, you can look at last week's video, because I spent 6 minutes looking at it in more depth. And the same analysis applies going into this week, since last week we just essentially had an inside week. So if we are going to continue lower in the DXY, that does actually point towards a breakout. And it would be the first gold breakout, as far as I can remember, over the last 3, including this, so this one and the last 2, that if we were to break higher, the dollar would actually be bearish as it currently stands, as opposed to previously bullish, which actually broke the back of the previous gold breakouts. So gold is still a very important market to keep note of and pay attention to next week. Next is silver. Now, last week I highlighted the fact that silver was actually structured to the downside, as you can see here. But because the dollar itself is quite bearish, I personally would not want to short silver. So I would be looking for one of 2 things in silver. First of all, I'd be patient, and if we break above the 23.41, that would be the sign to start to look for further advances in silver. And if the US dollar, instead of being bearish, say it reverses and we start to turn bullish and silver comes down further like this and breaks out, that would be the opportunity, if the US dollar turned bullish, to start to look for this to the downside. So as it stands, we kind of have the opportunity to trade this both ways, because gold is structured to the upside, silver is structured to the downside. However, I prefer the dollar week setup, which is gold to the upside. Again, we covered these in a lot of detail in last week's video. So patience required on silver, in my opinion. I wouldn't be surprised to see this break higher. And finally, we have Bitcoin. Now, I have been bearish in previous videos on Bitcoin, and we came right down to the target of the 39.63. Because we missed this, we actually came down to the 39.650 instead of 630. I am leaving this target on and looking for further declines. Any pullback as it currently stands is still viewed as an opportunity to look for short setups into the 39.63, and then if we break through here, down to the 35.452. So that is it for me for this week, guys. The key takeaways here are that the markets in general are starting to turn neutral. Opportunities are drying up heading into FOMC on the 26th. So it really is not a time to go gung-ho in the markets. And there's no real low-hanging fruit heading into this week. The best plan leading up to FOMC is going to be patient, to be disciplined, and to pick only the best opportunities as you see them in the markets. So as always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care, and don't forget to trade safely.